Good afternoon. Welcome back to the latest edition of the InvestTalk market analysis for the week ending August 15th, 2025. And this week I'm titling the video Stagflation Confirmed. Will the Fed blink next week? And I'm host of InvestTalk, Justin Klein. I hope you like and subscribe to this channel as well as our podcast, InvestTalk. Let's dig into the market to this week. Obviously, a lot of green, definitely some red here down in tech. Definitely saw some sell-offs there. But overall, it was a green week, right? Industrials certainly were weak, but uh, so bit of a mixed bag, but certainly a strong week for equities. But we didn't close the week. This was OPEX week. Oftentimes, this is a turning point. But there was also a lot of economic, at least inflation news, and I'll really dig into that because that's really the story here is because the CPI, which came in on Tuesday, and it was mixed. Uh, Year over year, 2.7, a slight acceleration. Core went to 3.05. Okay, so um, this was a bit mixed. It was more on the services side that accelerated, which kind of rhymed with the PMI services and prices paid index from the previous week. Year over year, you had 3.29 on the producer price, though. This was on Thursday, and this is far more important. Producer prices lead CPI by about 3, 6, maybe 9 months. Six is probably average. And so, what you're seeing here is that producers are starting to feel the cost pressure when it comes to lower labor supply as well as the tariffs. And you had this much higher than expected. PPI came in at 3.3. Core PPI came in at 3.7 if you round up. And so the highest level in a while, and look at the month over month, this was coming at zero point 0.2, came in at 0.9. Same with the regular producer price index, came supposed to be zero point 0.2. These supposed to be zero point 0.2, came in at 0.9 for both the core and the regular PPI. So this is showing you inflation is accelerating. Here is that leading indicator. You see the orange line typically goes up before the purple line. The purple line is the CPI, and the orange line is the producer price index, okay? Because ultimately, these producers who pay these prices, they have to feed those into the overall economy, into their consumers, right? Import prices on Friday were fine. Industrial production was fine, but clearly inflation is an issue. And we have the jobs report and the jobs market that continues to weaken, right? So if we go to actually, I want to bring up that was on Thursday. You did have the continuing claims for unemployment, right? Here's the initial claims. We always talk about how that's not nearly as important as the continuing claims for unemployment. Now that did tick down a little bit, but still, you're in an uptrend. So this is a stagflationary environment, and the Fed was before the PPI number was thinking, the market was thinking, hey, they might do a 50 basis point cut. Now they're still leaning on one cut, but more on a pause is a higher likelihood than two cuts, right? Or a 50 basis point cut. That's coming up in September. Okay, so certainly this was a more worrisome report for the overall market. Now, the Treasury General account is rising. They are issuing on the short end, so it's not really impacting liquidity dramatically, but this will impact liquidity some. The fact that they are bringing the Treasury General account higher. The positive is that bank credit continues to grow. So the dollars that are being created in the system are pretty solid. Now, the only issue is one potential signal here is Bitcoin. I'll wait for that to load. Actually, I'll talk about, while that's loading, I'll talk about Jackson Hole. Jackson Hole is coming up next week. This is where the Fed gets together with other major central banks, and this is a pivotal point for policy. And obviously, they're gonna embark on a rate cutting cycle, but there are other factors that they are considering, like the demographics, right? You're talking about aging population, immigration, et cetera, productivity. This is going to be probably around AI. Then macroeconomic policy. This is probably around tariffs, right? So they're going to talk a lot about that and the future path for policy. So that'll be a market mover next week to see, what is the market expecting? Is it a more dovish Fed going forward or a more hawkish Fed? And what's telling me that this might be a more hawkish Fed is Bitcoin. Look at this is the last week, or sorry, last month in Bitcoin. This is kind of heavy, right? You're spending more time in negative territory on the month than you are in positive territory. And you try to break out and it failed. And this is bear flagging. If this breaks below this 112 level on Bitcoin, this cycle could be over. That's a big yellow warning sign. If it breaks 100, the cycle is definitely over. So I'm starting to get modestly bearish on crypto in the medium term. All right, so there's that. So let's dig into the charts real quick. And here are the cues, right? The cues definitely close the week. Let me go to a weekly chart here. Let me pull up some of my other data points. There we go. So you had a bit of a topping tail here, not really high volume, but let's take a look at the S&P on the weekly. Okay, nothing too crazy there, but you are seeing, a bit of MACD divergence. This is not a very strong high, I will say that, right? But the trend is still up, so you can't be too bearish on the market, and I'm not that bearish. I do think we're set for a pullback in markets over the next couple months, but I don't think it's going to be major. The VIX remains low, that's fine. Move index remains very low. That means the treasury market is fine. A lot of that is they're issuing on the short end, so that's very important as well. But what's interesting to me are actually these private equity funds. And look at this. Let me go to a daily here. Look at all the private equities. You're talking a nice little rollover here on Apollo. Let's go over to, where's KKR on my list? It's in here somewhere. There it is. There's KKR. And then we also have, what's the other big one? I have it on my list here. Blackstone, right? You see all of these kind of weakening and rolling over. And this is telling me that the market might be ready for that pullback. And look at the foreign markets too, domestic as well. That's starting to gain traction once again. You had that rally here, and those tariffs are now hitting, right? This is something that's going to start to hit the economy in the back half of the year, and the market's kind of been whistling past the graveyard on this, and it's pretty clear this is going to have a strong economic impact. We're in stagflation, right? And you can see this gold just remains sideways, right? Gold's been just been chopping sideways since the April lows, but you're starting to see gold's really perform once again, right? You have this pullback, but this is a bull flag, right? And this is, I think, ready to go higher. So I'm bullish on gold as well as a bit bearish on equities, at least in the shorter term. I still think it could be a pullback to buy for one last leg of this growth cycle. Maybe this is the top, but I'm not betting on it because liquidity is still relatively abundant. Okay. So that's kind of where we're at in markets. Let's pull up like the semiconductor index. We did have this, the AMAT, right? Look at AMAT. AMAT had a pretty bad, if this wants to load for me, it probably doesn't. But Applied Materials had bad earnings on Friday morning or Thursday afternoon. And so this had a big, I think, 20% move down. And that brought the whole semiconductor, I'll just go back to the semiconductors. That brought the semiconductor space down in earnest here. And names like LRCX, let's see if that wants to load. Yeah, LRCX was down a lot. Does it want to load AMAT for me? Oh, there we go. Yep, down 14%. So, usually these semiconductors are leaders in the for the tech space. Obviously, the tech space is very heavily uh, weighted in the major indices. So that's where we're at. Definitely some warning signs here, and I would be a bit cautious on the market, at least in the medium term. Nothing to right sell everything or anything like that. I think it's a 5-10% pullback that kind of refreshes sentiment. But we're going to get an easing cycle that probably will help things in the medium term. But ultimately, a rollover is I think in the cards next year. But for now, the markets remain relatively bullish, and you want to be probably buying this pullback. So that's where we're at. Appreciate you all tuning in, liking, and subscribing to this video. Once again, a reminder the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.